How to get rich almost guaranteed and why you still won't do it. In this video we will show you a simple and low-risk way to get rich. All you have to do is follow these steps. We will even tell you why most people who know of this will still not do it. This is not a get-rich-quick scheme. In fact, it is a get-rich-slow scheme. Step number 1 is to get a job. We know, you want to get rich so you do not have to work. Even so, the first step is still to get a job. The higher paid the better. However, if you live in an industrialized, wealthy country you can still do this with a relatively low salary. Step number 2 is to manage your expenses. It might seem obvious, but you need to make sure you spend less than you make every month. If you are young and single, this should be easy even if you make a modest salary. If you are married with children, this could become more difficult. It is very important to have your spouse on board. Once you make sure to have a surplus, we want to make sure that you invest that surplus every month. Try to invest between 10 and 50% of your income. 10% is really the minimum. You can obviously try to invest more than 50% of your income, but at that point you may want to ask yourself if the extra money might not be better spent to improve your quality of life. What should you invest in? There are many different avenues to choose from depending on your level of expertise and areas of interest. We recommend low-fee, low-cost, index funds. An index fund is a fund that mirrors the stock market that you want to invest in. Since there is no active management, they can have very low fees. Over long periods of time, this is very important. The average rate of return of the stock market historically has been about 10%. Index funds are also the perfect option to invest in if you do not wish to follow the stock market on a day-to-day basis or research individual stocks. By the way, did you know that people who click like on this video and subscribe to this channel average 5% higher return on investments every year? We could have just made that number up, but unless you click like you will never know. How should you invest? Consistently. Try to invest the same amount every month, gradually increasing over time if possible. If the market goes up, invest. If the market goes down, invest. No one can consistently predict the market, so by investing every month you do not have to. This is called dollar cost averaging. If you would like to see a video going into this in further detail, let us know in the comments. You can invest in several different index funds to spread the risk. For example, one US index fund, one European and one Asian. Which index funds to invest in is up to you. You can also invest through several different brokers to minimize counterparty risk as well. Assuming the historic 10% growth per year, this means your investments will double every 7 years. $1 invested today will be worth $2 in 7 years, $4 in 14 years, $8 in 21 years, and so on. You may notice that the majority of the growth will always be towards the end. Every time you are able to wait another 7 years before deciding to liquidate, that will double your money, so the difference between investing say 35 years compared to 42 years is very big. So to sum up, get a job and invest your money wisely in index funds over a long period of time. Let's run a quick example. Perhaps you are 20 years old. The average salary in the US is about $3,700 per month. You manage to put aside 20% every month to invest, that is $740. Obviously this example is a bit simplified, but please just bear with us. By the time you retire at age 65, your investments will now be worth roughly $6,383,000. Of course, when you are 20 years old, 65 seems so very far away, but blink once and all of a sudden you are 40 years old and you wish you had invested the last 20 years. Blink again and all of a sudden you are 65 years old. Do you want to be a rich 65-year-old or a broke one? Now that we explained exactly how you can become rich, is there any reason to not do it? Well, it will require discipline over a very long period of time, and that is very difficult. you will have to sacrifice some small amount of money in the now to make a lot in the future. The younger and earlier you can start investing, the better, but when you are young, then 20, 30 or even 40 years in the future seems impossibly far away. What is your plan to get rich? Let us know in the comments below.